the intellect to be able to get it yourself. Now I'm messing with you guys. Let me stop. Let me stop. It's real easy. It is supply and demand. So I'm gonna pull up the chart right now so you guys can see it. Let me make it full screen. So the first one that people ask me to cover is Coinbase. Why? I don't know why. The company is literally trash. They asked me where is a good area to buy it at. Again, I'm not a financial advisor, so this is just advice. This is purely working off of supply and demand. There's no paywall. You don't have to pay me to get these prices. I'm literally telling you how you can get them yourself. You do not need to pay anyone out there to get these price targets. You don't need to join a club or anything like that. Literally every week, I will cover certain tickers. Just DM me either on Money Market Truth on Instagram, or you can do it on my personal one, which is Trading with a Dummy. Now, Coinbase, obviously, if you can see, I mean, it IPO'd and it literally has been, it had a run up and then it's been going down ever since November 2021. So the reason why I can't give you a defined demand level here is because it doesn't really have one. It's broken below all of theirs. So it's currently at where's that, 45.57. So there's really no level here. It looks like it created a support level. So I put the support level here, which is 45.57. But if you look at the 52-week low in situations like this, if I was to get into this company because I really want to be in Coinbase for some reason, I would look at the 52-week low, and that's where I would start scaling in. I wouldn't buy at the high. I wouldn't buy. I mean, it's what actually I think is right after hours is now 49.78. I mean, it's close to it, but I would definitely wait. We're still in a bearish territory. Crypto's tanking, so this could honestly drop further. It could literally go to $20. It could go to $15. But in a situation like this where that doesn't have an actual foundation base for supply and demand, I would just look for the 52-week low and start scaling in there. But I would be very, very careful with Coinbase because I honestly, I think it's trash. The next one was Nvidia. So if you look here, I did a weekly and a monthly demand. So the bigger time frame, the better price you can eventually obtain. But on a weekly level, I have $136 to $146. That's a good starting point to start scaling in my opinion. That's where I'm going to start scaling in because I do like Nvidia. Again, I know there's issues. We talked about it earlier today about TSM and what's going on with the chip sector. But I would definitely scale in at between 136, 146. I typically like to wait for the bottom of the demand level. So I would buy a few shares there. Now, there's a key level here at 124.34 that I saw, which seems to be a support level. I will probably buy some shares there as well. And then on a monthly time frame, though, Nvidia could go between 114.91 and 136. So again, monthly time frame I probably prefer over the weekly one. But again, I have no problem scaling in, so don't invest what you cannot afford for it to drop and lose. The next one they asked me was Lucid Motors. Man, this one was a roller coaster, if you guys remember. I mean, it had some really highs and then it just kind of tanked again. This one also started going down as of November. And what I have here is a weekly demand is what I found. I didn't do the monthly because really, if you look at the monthly chart, it's kind of hard to determine where the demand level is. But, you know, there's a support level there. But I did it on the weekly, and on the weekly, I would say it's between the bottom of the demand zone is $15.28. The high is $17. That would be the range that you would want to buy at if you really want to get into Lucid. But Lucid is another one of those companies, brand new companies that's very volatile. It is literally dumped like way past 50% of what it's valued as at. So be careful with that one. Next one was Microsoft. Everyone's interested in Microsoft. I am as well. So for Microsoft, on a monthly demand, I have $238 to $253. That's the monthly demand. Again, I didn't do the weekly on this one because this is a more established stock, so you can go into monthlies and focus on that. So this is the area where I will start buying shares in. Again, 238 is the bottom of the demand zone. 253 is the top of the demand zone. I'll wait until it reaches into that area. As you can see, it actually did back earlier this month. It went all the way down close to $240 and it bounced back up and went up, and now it's back on a downtrend. If it breaks the demand zone here, I don't think these demand zones will hold. I think the next one will be between $196 and $213. So that's where I would be very comfortable buying a lot more shares at. Next one is Amazon. I get that a lot. I keep arguing with the guy at my job about this one, but I definitely think it's going to happen. It keeps touching the top of this freaking demand zone, which is Like it gets really close. I have the top of the demand zone $100, the bottom $88. That's where we feel comfortable buying at. Preferably $88 is where I would like to buy at. So in the 80s is where I will start adding to my positions. And then Google, people ask me about Google. This is a little extreme, a 1682 to 1775. I know it seems crazy. If you go to a weekly, there are some demand zones on the weekly level. If you pull back, there's a few here. There's one here at 2042. Just knowing what's happening right now with the market, I prefer to look at the monthly, and I would enter at the monthly if I was you. I know they're possibly coming up with a split here shortly, and historically, when a company splits, it may have a run up the week prior, 2 weeks prior, 3 weeks prior, but then when it splits, it kind of starts tanking for a little bit before it starts running again. So I'm comfortable waiting for 1682 personally. Next one is they asked me about Chargepoint. If you guys are not familiar with Chargepoint, it's basically like a charging station for EV vehicles. They asked me what my thoughts on it is, as well as the demand zone. So the demand zone for this one is $8.32 to $11.83 on the weekly demand. I do not like this company. Look, I don't know if you guys have ever used Chargepoint before. If you have any EV vehicles that's not Tesla, because Tesla definitely has a monopoly when it comes to charging stations, but you can only use your Tesla on it, and the infrastructure is amazing. Like with Chargepoint, I don't know if you guys ever used one of those before. I can tell you it's a hit or miss. They're not maintained like Tesla. Sometimes you get there and they're not even working. So as a company, I do not like this one. As an investor, I do not like this one. And if you look, it's been literally on a downward trend since 2020. Now, it hasn't been profitable ever. So there's some key points that I wrote down for notes for the person who was interested in Chargepoint. So it hasn't been profitable. It had significant insider selling. I was looking at the insider selling. It had 1.7 million shares sold within the last 3 months. That's not a good sign, y'all. And it doesn't have any dividends or a PE ratio. So I like to invest in companies that have a dividend and at least a PE ratio. This one doesn't have neither. However, here's the positive side of things, right? It is forecasted a revenue growth per year of 36%, and does have enough cash right now to last for like a year. And overall, it's not in the worst shape. Their assets, both short-term and long-term, exceed their liabilities. So that's pretty good on the cash front. But overall, I do not like this.